Hey there traders, welcome back for episode 91 from the StockBandit.tv. It's a place you can find trading videos to make you better, and I'm really glad that you're here. Alright, so in episodes 88 and 89, we covered some really important ground on this topic of setting stop losses. So if by chance you happen to miss those, be sure and go back and watch them, because this episode you're watching right now is a continuation of those prior episodes in this series. So in this episode, I want to discuss another key element to setting stop losses appropriately, which is that the stop loss you're using for a trade will impact your position size. And what's really interesting here is that a lot of traders get into a trade and then they figure out their stop loss. They've determined an entry and a position size, and then they look for a spot to exit in case of an adverse move, just in case. But I think, in my opinion, that's backwards, and it opens the door to a whole slew of mistakes that can really prove quite costly for you as a trader. The way that I trade is that I want to determine my stop loss before entering the trade, and we discussed in the previous episode that's going to be based on the chart. But only once I know that can I understand how large of a trade to be placing, and this is absolutely crucial, so I can't emphasize it enough. Know your stop and then determine your position size. Let's unpack this a little further and I'll show you what I mean. Okay, so given that my stop is going to be based on the chart and that not all charts are the same, if I want to keep consistent risk across multiple trades, it's going to require some varied position sizes. What does that mean? Well, let me explain by looking at a couple of examples here. Let's say that HIG, H-I-G, this is Hartford Financial Services Group. Let's say this is a really lively stock, which it really has been lately. It's been down in the 11s and up above 17 just in the past 2 weeks. So this thing has been moving quite a bit, plenty of volatility here. But let's say I like it for a possible swing trade if it can break out of this slight, pullback type consolidation to the upside. Let's say I want to trade it above this consolidation with an entry right around here at 1690 as this pattern gets confirmed. And let's say I feel like an appropriate stop loss is going to be down here beneath the pattern at the 1575 level. So based upon a pattern failure and also giving this stock plenty of room to fluctuate in its normal way. So what that's going to mean is a risk of nearly 7% from my entry compared to where my stop loss is if I were to get taken out of the trade. But let's say that on the other hand, I also like this setup here in Lockheed Martin, LMT. The stock's been trending lower, this bounce failed, and then over the past couple of weeks we've seen this descending triangle pattern start to form in the chart. So this looks like this thing could easily break support down here at 73 and start heading lower again. And so if I wanted to take this for a trade on the short side, I'd look to set my entry right here at 73, and I'd be looking to set a stop loss above this in case the stock happened to reverse back to the upside, and that's at the 76 quarter level. So my entry compared to my stop in this case would be roughly 4%. So those are two hypothetical trades with really different risk levels if I take the same position size for each one, right? If, for example, I took entries of 1,000 shares on each one and I happen to get stopped out, I'd lose a lot more money on this Lockheed Martin than I would on the Hartford, because the dollar stop from my entry to my stop is significantly different. Instead, what I'm going to do is I'm going to determine a set amount of money per trade that I'm willing to risk. Let's say, for example, that's half of 1% of my account. And let's say I want to put that into really a real simple equation now that I know what my stop losses will be on each of these trades, again, based on the pattern failure and the chart. So for the sake of this example, let's say that's going to be $1,000. So I'm willing to risk $1,000 in losses per trade. And so let's see what that means. So taking a look back here at HIG, with an entry up here at 1690 and a stop down here at 1575, I would divide $1,000 by that $1.15 stop loss for this trade, and that's going to give me a little bit more than 800 shares for my position size. And I'm actually going to round down so that if I do get stopped out, I'm going to lose $1,000 or less. So I'm going to stay within that limit, okay? And on Lockheed Martin, LMT, again using that same $1,000 risk with an entry down here at 73 for a play on the short side and a stop out up here at 76.25. I'm actually going to divide that $1,000 by this $3.50, or $3.25 is what it is, and it's going to give me roughly 300 shares. So if I get stopped out, my loss is going to be within that $1,000 limit. Okay. Now, this is an apples to apples scenario, and the best part about this whole way of trading is that I can take 100 trades or 500 trades, and I can really just level the playing field between them across my trades, and I can treat them all as at-bats, and it doesn't place any greater pressure on one trade versus another, and I really like that. So anytime that I see a good setup, I just follow this plan and I take the trade. And my job as a trader therefore becomes far more methodical. I locate trades, I put them on, I manage them with my orders, and I repeat the process over and over and over. I don't do anything amazing, and I sure don't have to predict what the market's going to do or where it's going to go. I just keep working the charts. I find my setups, I take the patterns that I like, and then I take those trades as they come along. It's really great. All right, so in episode 92, I'm going to touch on one last point that's tied to stop losses, and it's a really important one. So I certainly do hope that you will join me for that one as well. Thanks for tuning in for this episode, and I will have the next one up soon, but until then, trade like a bandit.